Kirk Duckwall, the house geek here, your real estate and equity advisor with Mastermind the Market, the Twin Cities real estate market update. All right, did we just hit the bottom of the Twin Cities market? Well, we'll dive into that in just a second, but I wanted to mention our upcoming free class, Hack Investment Real Estate. This is a new class for us, but very excited to be doing this. It's going to be on November 13th at Brunson's Pub, starting, I believe, at 6:30. We're going to be covering all sorts of great things, such as how to calculate accurate rent amounts when looking at investments properties, how to maximize potential rents, as well as running a true cash flow. Also, though, we're going to deep dive into identifying the best investment opportunities around the Twin Cities as well. So again, come check out that free class. I'm going to put a link down below for that. All right, let's dive into the topic at hand. Looking first at some of the recent market stats. Showings per week, per listing, average in the 250 to 500K price point, dropping from 2.9 to 2.85. Not a big drop there. We are down a little bit over last year's 3.03, but that's all inventory related, and we'll talk about that more in just a minute. We're seeing showings, though, higher than last year. And this is because we're seeing more buyers in the marketplace. And we expect now that we're post-election, this trend will continue and that spread maybe even get a little bit higher because we know that there have been buyers holding out, waiting for the election to wrap up and see where things are going. So we're tracking up by 11% on total showings, and that's a good indicator of an increase in buyers in the marketplace. Days on market average in the Twin Cities, 34.3. This is ultimately putting our market meter back up. We've seen a couple weeks running, 2.96 up to 3.06, up to 3.3. Well, what does this mean? All right, charting this out, we can see we're kind of coming off of a low point when we rounded out September at a 3.91. So on the market meter scale, a 3.91 is right about here, mild buyer's market range. And again, we're trending back towards balanced market. And so it's likely we'll see that trend hold or not much movement, plus or minus that much now that, again, going back to that election, that we've cleared that time of year. And a lot of this has to do with we're seeing inventory levels starting to come down. A key factor in that market meter, supply and demand. Supply is starting to drop. Another notable point is we saw prices on average move back up going from September into October. Couple other notable points here. We have new listings into the marketplace. It is falling off, but a little bit higher than where we were last year. But pending sales is up by quite a bit, up 20%. So again, bringing that inventory closer and closer. So where we were up 15, 16, 17% a few months back, we're now only ahead on inventory by 9.9%. So ultimately, where does this leave our market? Well, we're kind of in that best opportunity. It does not look like it's going to get a whole lot better for buyers. This is the time. This November, early December timeline. We've seen years where things start to actually pick back up in December. That looks like it could be the case again. So for buyers, this is the deal hunters' golden time. For sellers, you want to make sure you're patient, you're not reacting too aggressively to things maybe being a little bit slower, because we're going to see that market shift, what I like to call the 30K and 30-day. That's January. How quickly that our market moves back. If we look at that market meter, we can see last year rounding out December 4.1 And then by the end of January, 6.2. So all the way into seller's market in that 30-day period of time. So for sellers, be patient. If you're not on the market right now, maybe just waiting a little bit might be best. Again, come check out that free class if you've thought about building or getting into investment real estate. Put a link down below. All right, take care and have a great week.